goodness.
Oh.
So thank you very much, everybody, for coming out on a nice wintry day when we were supposed to have spring. We have Karen here from RBC to talk to us about the new changes that have taken place. Lots of questions if you have them that can help maybe your clients or if you are having any issue with the new change. We'll let Karen take it away from here. Thank you very much for joining us.
Thank you for inviting me. So I'm very informal. I don't do formal speeches or anything, so bear with me. So I guess the biggest issue would be the changes coming out from the government, and just a heads up, it doesn't affect all the credit unions. It's the major banks that are all regulated, so they don't have the same regulations. So if there is a client that has a serious problem, they could try a credit union for a different type of approval because they don't have to do the stress tests. Okay?
For mine does. Kindred does. Kindred Credit Union does.
Sorry?
Kindred Credit Union does do the stress test.
Yeah, there's the odd one that does for some reason, but they don't all have to, they're not regulated, so. But that being said, RBC does have what we call alternate mortgage solutions. So it's an alternate lending company that works for us, and any clients that have issues, either their debt servicing is too high or they don't have a long enough history of income that we can use, we can send to them, and they're usually 95% approved. So they have a way of getting around. We use B lenders and whatnot. So it's really good to know because we don't have many declines that are actually declined and not going anywhere. What we do is we try to get them to take those alternate lenders for maybe 1 year or 2 years, and then they come back to the bank. So it works in our favor, it works in the client's favor.
So that's not a B lender? Your alternate side is not a B lender?
He's not, he works for RBC, he finds lenders.
Oh, okay.
Yeah. So they send them out to different places and then bring them back here.
Okay.
Yeah, so it's good. So as far as the changes then, qualifying rates have just gone up again. They were 4.99 when they first came out, and they're 5.14 now. So it's not as simple as 5.14. If the client is taking an interest rate and their rate that we're giving them is 5.34, their rate that we qualify them at is that rate plus 2. Okay? So it's the higher of. So they can kind of get a side sometimes if they're going into a variable mortgage because the rate is lower. So the prime plus 2 is going to be a lot lower than if they're going into a fixed rate. Okay, but it is the higher of the posted plus 2 or the 5.14. So one of the printouts has it on here. Conventional mortgages work like that. CMHC does not. They just go by the 5.14 for their qualifying rate because there's less risk to the banks because they are already insured. So, and then our builder applications. So I'm not sure if you're familiar with us and with our builders. So typically a build is 6 months, 9 months, 12 months out. We have a cap on the client's rate, so we guarantee that their rate over that next 12 months is not going to go over a certain level. So the qualifying for them is the 5.14 plus 0.4. So they get a bit of a break. Any questions on that? Every deal's different too, and there's there's certain ways to manipulate to get a bit of a lower number on there, but as far as impact goes, it's not a huge impact unless the client was pre-approved 6 months ago and they were already at TDS of 40%. I haven't really had many people that have actually lost out on their house because of this now. Pre-approvals have to go to this. Anybody that was approved though, as a pre-approval even, so if we submitted it as a pre-approval because we weren't sure about their documentation, if credit came back and said, yes, we can approve that, then we're still honoring that. So,
Okay, that's good to know.
How long are you honoring it for then? So let's say,
the rate commits are 120 days.
so 120, so if they got it right at that last minute
Yep.
and weren't qualified at the higher, you still are going for the 120 days?
If we've got the credit department has approved anything, yeah.
Okay.
Yeah.
Okay, that's
Yeah,
good to know.
Have you seen people come in and a little bit of a shock saying they can't afford what they thought they could afford then?
Oh, yeah. Yeah, so I mean, it's up to all the mortgage specialists to be contacting their clients back in November and December, and just reminding them that everything's changing if you don't hurry up and get something, put an offer in. you're not gonna get it. But as long as they had their offers in before that, and even if it closes 6 months down the road, we honor those. Yeah.
Okay.
Once we tell somebody they're approved, they're approved.
Is that RBC only, or most banks are doing that, would you know?
I honestly don't know. I know our builder deals, it's RBC only that does the firm approval for a build. The other banks will typically then pull a credit bureau a month before closing, and if they've gone out and bought a car or something, they could be told suddenly that they're no longer approved. So with our builder deals, it's great. It's certainly a perk. That's why we have so many builders that we're linked up with. Because as soon as we tell them they're approved, we don't look at their credit again. Yeah. Well, I mean, look at the risk, right? Somebody's building a house,
Exactly.
2 weeks
Yeah.
before, they're told, sorry, we're not gonna give it to you now.
Yeah.
We also insure them the whole time there's a build going on for life and disability with no cost to them. So they have full insurance while the house is being built. And there has been situations where someone moves in, the spouse has died, but they get the house and the mortgage is paid off.
Wow.
Yeah, and it doesn't cost them anything, so that's really good. So those kind of stories we like to tell.
Yes.
And we hope they keep insurance.
Well, not that the husband was killed off, but, yeah.
Why does that have to be the husband?
It's just a husband.
We do check though, make sure there weren't marbles on the stairways.
Yeah, clean up.
Nobody got chucked. So one of the other papers in here is about our alternate mortgage people, okay? So poor credit, hard to verify income, and expanded debt servicing ratio. So if their TDS is 45 instead of 40, it's still possible that these guys can get you approved. They pay higher interest rates. Typically it's about 1%, it's not huge. But there's a fee to do the application with them as well, so.
Is that fee usually 1%?
Honestly, I'm not sure.
Okay.
It's different for every deal, it's different for every lender that they end up finding.
Yeah.
Yeah, but I haven't had any of my clients that have gone there that have said, no, it's too expensive, they're happy to take something, right? Okay. So, specific programs that we do offer, because you probably get a lot of different properties you're looking at. First Nations, well, we don't really get too many of those, but wealth accumulator equity program, so a client that has a lot of wealth, they don't want to spend it all on their house, they want to have a mortgage, but they have no income, we can certainly still look at them, okay? So we go beyond the fact that monthly they don't necessarily have enough, based on the fact that they have enough savings then to pay off the mortgage if there's something urgent that comes up, okay? Self-employed program is a great one with us too, we get to increase their rates by about 15%, because they're never declaring what they're actually making. So that always helps out the self-employed, so, you know, if you look
Which
at.
is all of us, actually, like we all
Yes.
fall under
Yeah.
that,
Yep.
that, which
So
makes
your
it very
T1 general,
difficult.
line 150 might look pretty wimpy sometimes, even
Right.
though you've made, 150,000, but you're declaring 25. So we can move that up. A corporation, we can look at their financials and go by that. He might just not be paying himself because he doesn't need to right now, right? So we'll look at his financial statements from the corporation and say, well, like I did one the other day, and I actually had to get he was declaring 55,000, and I put stated income of 250 to get him to qualify for this house, and they accepted it because his financials were healthy enough. So they let us kind of inflate numbers that way, as long as we can back it up somehow.
So stated incomes are still allowed?
Yep, 65% loan to value though.
Ah, okay.
Yeah, so all these specialty programs, you actually have to have 35% down in order for us to work with those.
Even under the new rules?
Yep. So that's the self-employed and the wealth accumulator and the business client, okay? If we're using stated income, it has to be 65% loan to value maximum. Newcomers to Canada is great, they don't even need jobs.
Yay! Wow, isn't that nice?
As long as they have savings, again, they have to have a large amount of money on the sideline to be able to support, because we don't want to put anybody into a house and take it away from them either. So we look at the whole client and we kind of say, okay, you're new here, but you were doing this over there for 10 years and you're expected to do something good when you get here too. So as long as you have savings to prove that you're okay. And we verify the savings too. It's not just somebody's just gone and borrowed from the neighbor to show us.
Right.
Right, we look at a history
It's
on
in an
it.
account for a long time.
Yeah.
Does it have to be in a Canadian account for a
Nope.
certain amount of time?
No,
You
as long as they have
you can
proof.
move into it? Okay.
Yeah.
What about offshore assets as far as homes or other properties in other
Not out
countries?
of Canada.
Not out of Canada?
No.
Okay,
No, even American, we can't use
Oh,
assets just
interesting.
like Canada.
okay.
Or incomes.
Oh,
which I just did one, and he has piles of pensions from the US, but they won't use it. So because he also has savings, they're looking at him anyway, and putting in, you know, on the sideline on the notes, he actually can support the deal because he has these pensions, but we aren't actually allowed to use them.
Wow.
Yeah.
Oh my gosh, what echo.
Aboriginal banking, I've actually never done one of those. AMS is on there, the alternate mortgage people. Temporary residents on work permits, honestly, I've never done one, so I'm not sure why a temporary resident would want to be buying. They would come in as a non-resident application, which is 65% loan to value again. So we do non-residents as well. Somebody from the States wants to buy a house here, their kids are gonna live in it, whatever. They're non-residents, 65% again, and everything has to be verified. So as long as they're working, they're and collecting or paying income tax out of Canada, they're a non-resident. So if you have a client that's a Canadian and has been working abroad or whatever, and comes back to Canada, if he hasn't yet filed any income tax in Canada, we still have to treat him as a non-resident, because there's no tax filings.
That makes sense,
Okay. After his first year, he's not, but once when he first arrives, he still is. It's all about the income tax stuff. It's a non-resident. And medical people, we did one the other day, a new doctor. Now he had been out of Canada for a couple of years, so we didn't have an employment history here. But we can actually get the hospital where he was employed to write us a letter stating what is his expected income to be, and back it up with, you know, 3 or 4 paychecks. 3 months, he was getting paid monthly, and they're okay with that, so, yeah. Poor guy's only making 46,000 a month.
Oh, man.
Oh, rough life.
So
Yeah,
rough.
we're all the same, we're all in the wrong business.
Yeah, no kidding.
But again, as long as everything can be backed up, yes, he was, you know, he was outside Canada working, but the hospital's saying, oh, this is what someone in his position will make. And we look at the history so far, the last 6 months, and he was making that, so
Wow.
we go with it. So then that's quite specific, so we also have some property specifics. We do seasonal cottages, construction mortgage, somebody wants to buy their own lot and then build their house on that lot. So it's a construction process that's quite involved. They have to have the cash to back themselves up. Yeah, you guys wouldn't get involved in that, I guess. The land purchase,
The
I
land
suppose,
purchase
right?
we would, yeah.
So as long as they have cash to back themselves up, because they have to take care of part of the build, and then we do an appraisal, we reimburse them, they build more, they pay their people, we appraise it again. So they are putting out cash, so they do have to have some savings. They can't just say, I want to build a house with no money. They're not gonna pay it until it's done, right, in stages.
What kind
And is
of,
there, yeah,
what
maybe,
kind of loan to value are you looking at for that? Like if you're doing a construction loan like
like how
that?
much would you want to look at?
Well, you gotta get all Glenn has to get all his appraisals done by his contractor. And as long as he has enough to get the first stage done, so the first stage would be the basement,
The base,
right?
yeah,
The
foundation and that.
foundation done, and then they're gonna appraise it and then reimburse him. So he's gonna need a couple $100,000 for each step.
But when you're looking at loan to value, like if you, okay,
Don't really do it.
you don't do a loan to value?
Specifically like that.
Okay.
It depends on the cost of the builder.
okay. Because I know some lenders I've spoken to in the past have been 50% on the land, right? Loan to value
Well,
and then,
typically they bought the land,
okay,
right?
outright. Okay,
Or the bank got a loan for the land.
yeah,
And then at the end of it, everything gets turned into that mortgage.
right, okay.
There's probably only about 3 or 4 that do the construction mortgages, because it's quite
Mhm. There's not that many.
new. Nobody
No.
wants to do it. I keep offering, do you want to learn how to do it? No? Okay.
Thanks.
It's all good. Leasehold land on First Nations, well, same as leasehold land. So if somebody's buying a house and it is on leased land, we really need to read the wording on the leases, because they are all totally different the way they're written up. Some of them we do, some of them we don't. There's one up by St. Jacob's, what's the name of that place? There's house trailers in there, and there's,
Oh yeah, just right off the highway.
yeah.
Yes.
What is it
Yes.
Just on Green Acres. It's,
No, you're gonna
Anyway.
praise us not.
The only reason we can't do those ones is because the owner of the property will not let banks in to do appraisals. So, if we can't appraise, then we can't do it. But some of the leases are either too short or they're too long, or, so, but we have to really read the fine print. So it goes down to credit, and they go over it with a fine tooth comb and let us know if they can do that.
Are you familiar with Morningside out in New Hamburg at all?
No.
Like, okay. Cause they're more like homes, but on leased land. I just didn't know if they would have
And a lot
that
of these
same
ones are in St. Jacobs,
specifications.
so it's the same thing, we
Yeah.
thought they'd be fine. But when we approached them for appraisals, you're not allowed to do them.
Okay,
Yeah,
Mhm.
so they want people just to go in there and buy up right
and buy it right out, okay.
Or I'll lend you the money.
Yeah,
Yeah.
right? That's right.
Yeah.
10% interest
The
rate
Bank
over
of
here.
Bob.
Builders and new homes, the same thing. So investment properties too. Investment properties is a funny little niche, because if you call our credit department and say, do we do properties if, you know, there's 3 or 4 students living in there, they'll outright say no. But it's all about the case you have to put. So certainly if there's a bedroom set up with a temporary wall in the living room, we won't touch that. That's a rooming house and that's too risky. The property's gonna get wrecked. If a client wants to buy a house though and have 3 students living in it, preference is if there's one lease and, you know, it's $1,500 a month and these 3 guys say $500 each or whatever, then we can usually get by with those. But if it looks like it's gonna be a rooming house, they won't do it.
And are you looking at 20% down for those as well then?
Any rental property is 20% down.
Okay, so that hasn't changed either.
Yeah.
Okay.
And if they were under Waterloo and they were already under the, like the license that they have to have, those would probably be ones that you wouldn't touch, because they'd be licensed for like 10 students, right? Or
If it
whatever
comes up
it is.
anywhere in the conversation with our credit people that
Yeah.
this is, you know, there's a gang of students living in there.
It's not gonna
It's
happen.
not gonna happen.
Yeah,
Okay.
No
Okay,
way.
Yeah, so every case we do that has multiple rentals, we actually
Mhm.
have to make a good case for, because you're always getting a different adjudicator too, first of all. Some of them are right off the boat and they're reading the manual in front of them, and
Yeah.
some of them are using common sense, which they should use, right?
okay.
So when it comes to rental properties, how many units maximum would you loan to?
We used to have a cap on it, they don't really have a cap anymore.
Okay,
So it's basically, it depends on the client.
okay,
Their total loan to value, that used to always have a cap on it too, and now they're getting a little bit easier with it, so as long as, you know, it's affordable to them. Certainly loan to value, if all their properties are 80%, then they'll probably not approve it.
okay.
But again, it depends on the client, everybody's taking one case at a time now.
So if you had a
Which is better.
4-plex or a 6 or an 8, it didn't matter
No,
at this point? Okay,
some of them might end up going to commercial depending on the property.
Right.
but-
Right. And if they're not student-based, then it makes it a little easier,
Yeah.
I would imagine.
Well, if it's a 4-plex though, and you've got one in each plex, it doesn't matter, right?
Right, yeah,
They're just concerned with the one house that's got, you know, 10 kids living in them.
yes, we all know those ones, yes.
You can tell them, look at them by the outside.
Yes, we
Yes.
can.
That's why the bank doesn't wanna deal with them anymore.
That's why all those big high-rises are going up instead. So, okay,
Any
That's
questions
good to know.
about those kind of, different clients, different scenarios, properties?
no, you handle some of the ones that are a little bit of the issues,
Yeah.
right? That we do have problems with getting,
so for our
There's
clients,
always an exception actually to almost every deal.
okay,
You know, we do look at the client too and say, come on guys, this really doesn't make sense to say no to this person because it's supposedly the rule. Yeah.
so what's the standard you're looking for from people as far as income? Like if I was to apply for a mortgage, what are you looking for from me in order to ensure that I can afford it? What form?
Debt servicing, you mean?
Yeah,
40% TDS.
okay,
And a little bit less for GDS. However, on our system, it does allow some clients to go above those numbers. So if their credit is impeccable, we've got lots of assets in there, it will allow them to go higher.
okay,
Without saying on the application, TDS is too high. And if it is too high, say it's 43%, it says TDS is too high, we can still submit down to the credit department and say, yes, but. Okay, so everything is not fine. There's no fine rule there. We can always talk to the adjudicator and say, let's look at the whole picture here, guys, not just this number. But typically it's 48 and about 34.
48 and 34, okay,
A clients get to stretch it up a bit.
okay. And as far as proof documentation, you're looking for NOAs,
So income, no, if they're on salary, T4 and 2 pay stubs.
okay,
NOA we only need if we need to back it up with a T1 general. So if they've got rental properties, we need to verify what they're collecting now on rent, and they're self-employed, we need the T1, so we have to have the NOA to go with that. But anybody who gets paid with a paycheck, T4 and 2 stubs. If they're on, which most people are nowadays, varied hours, commission, overtime, all that kind of stuff, we can use a 2-year average for them, which makes it easier too. So if they've been at the same place for 2 years, we average out 2 years, and then we can, that way we're incorporating their overtime.
Okay.
Clean credit's a big one.
So credit score that you look for, what is a bad credit, what is a good credit, and?
600 is just about the lowest we want to go.
Okay,
Yeah. So between 6 and 7 is, there's probably something on there, right? There's a couple lates, or they've just maxed out a lot of their stuff, so it's bringing their scoring down. 7 to 8 is very good, 8 to 9 is excellent. Over 9, they can get what they want.
how many people have over 9?
They have the money.
Right? Nobody.
Not a lot, but there are. It's quite exciting when you see it come up.
Oh yeah, that would be like an unusual, I'd be
Yeah.
framing it.
I'd be bragging.
Yeah, most of them are in the 8s, so.
Okay,
Like the really good ones are all in the 8s, they're pretty good. Problem we find is that credit scores will go down if you have credit that you max out and leave maxed out for a period of time. So people with credit lines, which they typically have if they've been students, right? Their credit line was maxed out because they were in school, and they haven't paid it down yet, they're just paying the interest only, and it's revolving until they get into a payback. Well, that's actually affecting their credit score, so their scores are low, and you go through the bureau and everything's been paid on time, and they're not understanding. Well, it's because the credit line is a revolving facility, and you're not revolving it, so it will bring it, yeah, so we work with them and try to tell them what to do to bring the scoring down, and typically, 3 months later, it could be a totally different number.
That's true.
So we do team up, which is nice.
Yeah.
If somebody needs to have some credit counseling and work on paying down things before they proceed again, they're introduced at the branch to a financial advisor, and they work with them for 4 or 5 months, and then they come back to us and see how things look. And credit bureaus don't change really quickly, but at least 3 months, it's usually good.
Yeah, it is pretty quick.
Yeah. And when it's really bad, though, it can stay on there for a long time.
Yeah, I believe that.
Yeah.
okay. Any other questions? And I think you had mentioned that there's a Realtor Program?
Yes. So the big brochure in here is about a Realtor Program RBC has put together. So we partner up with different real estate agents. If you're interested, I send referrals to you, you send referrals back to me, and every time you send me a referral and it closes, you get reward points. So it's kind of like the Avion points. We've got a lot of agents that are having their annual holidays for free, so it's kind of fun. Plus, it's nice when I'm meeting with a client and I can say, here's 2 business cards, call these 2 people and, see who you feel comfortable with, especially first-time home buyers. They've never dealt with anybody before. Gives them a chance to choose male or female if that's what they want to do.
Yeah, for sure,
Or
yeah.
just go by recommendation, right? So,
Yeah.
which is kind of nice too when you don't know anybody. So it's a great program, so read up in there, it tells you all about it. If you're interested, give me a call, so we go on the computer and we just sign you up with your social insurance number, and that's needed for the points system. If you want to partner but you don't care about getting points, then you just don't put your SIN number in there. Okay, so how it works is I'm supposed to send you 1 for every 3 you send me, because you guys get paid big bucks.
But we also pay big bucks. Yeah,
I don't know.
and it evens out. I'm not rich, are you? No. Nope.
But the partnering program works great, and they have functions every once in a while too, where we invite all the agents that we've been partnering with, we have cocktail parties and things like that, so it's kind of fun. Get you guys together too. But sometimes you have a client and they don't really have a banking relationship, and I'm not sure about, the other banks, but I know the Royal Bank is huge on banking relationships, so they don't want just someone to go to the mortgage specialist and get a mortgage. They want to make sure that they've got the right accounts to go with that mortgage, and that you still have, room to start savings plans and whatnot. So we put everybody together, so just partnering with agents and lawyers and accountants is just making that whole picture even bigger. It's good. the brochure in here is just about our home line plan, so if you have any clients that are talking about they wanna buy a house and they're gonna have to renovate it, 6 months down the road, the home line plan is great, because as you pay down your mortgage, your secured credit line on your house grows. So the amount you start with, you always have, so even though your mortgage is going down, your lending is still staying the same, so the space is being made up on a credit line at probably plus a half, and they can do their renovations in the future. That can get rolled into another mortgage segment too if they want to, so somebody that's used 20,000 and they wanna pay that off in 4 years, we can put that into a 4-year mortgage at any time, make the rate even lower.
Speaking of something like that, so you have a client who's buying a house, but it needs renovations now, and they want to borrow more towards their mortgage for that. What's your
Yep.
guidelines for that?
It used to be 10% or, I haven't done one in a couple of years, 10% or something.
Okay.
It's called purchase plus improvement.
Right?
So again, we have to find out how much they need extra. The appraisal will say, yep, that'll satisfy that extra amount, so then we lend them the extra amount. But there is a cap on it, so I
Yeah.
have to find that out for you.
Okay, but I remember it being 10%, I just didn't know if there was any changes again,
Yeah.
so.
That's what I remember it at 10 too, but I think they have changed, and I think it's a little bit higher now. I'll find
Okay.
out for you though.
Okay. So I think that's a big one in today's market, right? The houses,
Yep.
everybody can't afford
Absolutely.
everything's done up, but I can get that one, but I need a new bathroom or something.
Yeah.
right?
Yeah.
So,
We've also just come out with a new program, if the client only has 10% or 15% down, if at the end of the application their scoring is great, it automatically offers them a loan, if their debt servicing suits it, to bring their down payment up to 20. So that way they avoid CMHC.
That's right.
Mhm.
That's
So
really
that's just a
smart.
pilot project, we're just finishing up now, and it looks like they're gonna implement it, because it's working great.
That's great.
Yeah.
Right.
Yeah, I mean, some houses, it's costing them, $15,000 in CMHC fees, so
Mhm.
Oh,
if they can get a loan for another 5 or 10,000 and top it up.
That's nice.
mhm.
Yeah.
that's really great.
I think I told you, Sherry, but
Yeah,
If you're
you did, yeah.
with RBC, so we are, like my wife and I, and because I'm a realtor, I get a better home line interest rate for mine.
Were you at Prime?
I forget what it is now. It's been 2 years since
I know, I was
went and looked at it, but it was better than.
But I remember
the
you
agent.
mentioning it.
Like
Yeah,
the
they're
financial
talking
advisor we were
about
talking
moving
about
them to Prime Plus One now, but I don't know, because the rates have been going up, so maybe they won't do that anymore.
Mm. Anyway, that was just if you're with RBC, something to mention when you're in there.
Good for you.
And was that because they were perfect clients, or would that be?
Absolutely.
Okay. Yeah,
Yeah, I don't know
it's
if
a nice
realtor
bonus.
thing, or just because you're a high value client. maybe.
He said it was because I was a realtor and he had to. That's
But
what.
you're
That's,
a real good client.
oh,
Yeah.
oh, but that's what I understood it from.
Hang on to it.
Fair.
I said, okay, we had to sign up for something, like, just get it all verified, but.
Great.
I'll take that.
There are little perks out there.
I like.
Yeah, it does.
Interest rate.
Yeah. Both.
So
Any questions?
how's the business right now?
Little slow.
Yeah.
The December was crazy, when you had mentioned, about telling clients that they should be getting
Rushing.
going, like November and December, I
Yeah.
think were absolutely crazy, because everybody got into
Yeah.
that panic of making sure, because I don't think we knew exactly what would happen, if their closing was January, right,
Yeah.
or February, so, I've just found it's a little slower, everybody's just kind of taking their time, getting back to a balanced market too.
Yeah. Yeah, we're all
But,
fighting the same thing right now.
Have you?
November and December were unreal, really. I think I
Right,
did 3 months worth of my goals in November,
Wow.
and now it's gone,
yeah.
it'll come back.
I was gonna say, it'll come back, I think everybody just has to,
Get
the
used to
mindset,
it.
right, and then
Exactly.
not think
Yeah,
about it
exactly.
anymore,
Yeah.
and just
Yeah.
go ahead and do what they were going to do, which was move, or,
It's
sell,
a new
or
reality.
purchase something else, right, it's
Yeah.
just the new reality that we have to get
And it's
used
not a
to.
huge, the interest rate is not a huge hike, really, 2%. I mean, our first home was in the 80s, it was 16%.
Yeah,
So you look at people now looking at 3.54 and they're going, ooh.
it's not even close, I
Not even
know.
close. So instead of buying a house back then, you bought a townhouse. So now, instead of buying a $700,000 house, you buy a $550 for but,
Right.
yeah.
Yeah.
Yeah, because we had low rates for so long, right, everybody's
Mhm.
gasping right now, but it's, unless the property's massive, it's not a huge impact on their application.
And are you finding people coming to you needing to refinance?
Constantly, because they're deciding to stay where they are and fix the house up, so they wanna refinance.
And now, if you refinance, you have to qualify under the new rules again, right?
Yep.
Are people not being able to qualify for the refinance?
Oh, yeah, I mean, you'll always get that, but they might not have been able to before either.
Right, very true.
True, too.
Oftentimes when you have to refinance, it's because there's an issue, not always.
Right.
A lot of them are doing renovations and stuff, and they have a home line and they wanna increase it, cause the house values have gone up. So, I mean, that's a huge opportunity now, and they bought their house for 300, now it's for 7,
Right.
Mhm.
so now they can increase their home line limit, right?
And remind me, renewals, they do not have to
No credit
go through it,
application.
right? There's no credit application, it's just an automatic renewal as long as they
Yeah.
stay with the right one.
Exactly,
Okay, so it's just the refinancing when you're going,
yeah, any borrowing, right?
any borrowing that goes against it,
Yeah.
okay.
So we never check people's credit when they do a renewal, as long as they've been paying on time. then
Right, then there's no need to.
We're hoping they still will.
And appraisers, I'm assuming you're the same, that appraisers usually go out to 99.9.
No, actually, they've improved on that,
Okay.
because we were getting loaded down in the summer when the markets were crazy.
Yeah,
Our appraisers were taking over 2 weeks. So people that had conditions, it was like, we were just constantly on the phone saying, you gotta go.
yeah,
So,
Yeah.
they've changed the system now, and a lot more of them are desktop.
oh,
So typically over 500,000, they'll want a full,
yeah,
but even on those ones now, we're noticing that if we hit the button to do an appraisal, and if something's sold in the neighborhood and they're thinking, they'll write back and say, yeah, that's okay.
that it's okay, as long as it's comparable to what has been around.
They don't give us a new value,
No,
which the clients wanna know. They just tell us yes or no, it's okay.
okay,
But all the banks use the same company, we use Nationwide Appraisal Services. And that's why they were bogged down, because we were all using the same people, and they didn't have enough on when the market was going crazy.
yeah, when it was crazy.
Yeah, it was
Well,
pretty
from maybe,
embarrassing.
well, now until like the summer, right, it was just insane.
And now
okay,
it's
so
back
that's
to push
eased
the
up a
button
little
and they
bit.
go out there the next day, so it's okay again now,
Yeah,
which is nice.
okay,
But typically, over 5, tell your clients that they can probably expect a full one, although they
Mhm.
might not. Under 5, it's usually fine on the system, unless, the property was deemed really horrible a year ago, and they see it coming on the market now. Someone's done a lot of improvements that they don't know about, so they'll appraise that.
yeah, they'll wanna go and check it out, okay. That's good to know. Yeah, cause the last few deals, like I haven't even gotten a call to say, the appraiser's coming through, so
So they probably
just
don't
trying
need
to
it.
figure it out, right? If that is still a thing that is happening or whether it has, but you've answered it, right? It's kind of eased
They
up.
slowed it down.
Yeah, you've slowed down.
There was too
So we
many,
don't have
so
to
they weren't
worry
able to
about
do
it.
Yeah.
Okay.
You couldn't meet conditions if you're making us wait 2 weeks, so.
No, and we were extending, right? Or hoping that it was going to be okay.
Yeah, it was pretty scary, everybody going in firm, eh?
Mhm.
Oh, yeah.
Firm over asking.
Yeah, 100,000 over, it's like, oh God.
We did a lot of
I'm
praying.
home buyer.
Yeah.
What an experience for them.
Oh, God.
Yeah.
Yeah.
Yeah, so just for your knowledge too, the bankers will tell clients, please try not to go in firm.
Yeah.
We know.
Yeah.
You did
We're really
what?
hoping to protect them a little bit. We haven't had a lot of appraisals that don't come back at what they're offering, but we do get the odd one, and it just takes one for a client to be totally, now what happens if they've gone in firm?
Mhm.
When everybody was overbidding, obviously, it was 100,000 and we didn't accept the appraisal, then they've gotta come up with that extra 100 plus their down payment, so that happened to a few. But, and I'll tell them, if you've got mom or dad on the sideline that can back you up if the appraisal comes in 25 low, and, you love this house and there's multiple bids, your credit's impeccable, I don't have any concerns about the application, so that part's up to you then.
Well, hopefully
We
the
don't
spring
want
is not
those
going to be what it was last year,
Yeah.
right? And we can actually do our jobs,
Yeah, because everybody
properly.
was listing low too, right, to get the multiple bids.
Yeah.
Yeah, it's a tough game. especially a first-time home buyer, because they're scared anyway, so.
That's right. And trying to tell them that they don't have to, like, you can't go in with financing if you want
Yeah.
this home
But-
is really quite difficult.
And you can't see me afterward.
You know, and then
What do
phoning the bankers or like, you know, the mortgage, you know, advisors that we're talking about and saying, yeah, we went in firm. I hope you're gonna be able to get this for
If
them.
not,
It was a difficult time.
Yeah, it was, yeah.
Any predictions for the spring, like on your end, as far as mortgages and the, like the real estate, world?
They're predicting that it's gonna be great spring. They're thinking that everybody's calmed down to the fact that all these new rules are out, and by then, you know, they've had a few months where they've really slowed down and they're not doing much. That it's gonna be good, so
Good.
we hope so.
yeah.
Yeah, we do.
Yes, we do. We do.
Yeah, the government doesn't keep jacking up interest rates, so if the banks fall out,
Yeah, that's my thought.
right?
I know. Any word, any
One-
inside
one-
scoop?
No, we don't get inside scoops, but, I mean, the economists that work at the bank are always
Yeah.
sending out emails and whatnot. It looks like there's probably gonna be another bank increase, prime rate, which means fixed usually will follow right after.
We'll follow it, yeah.
The split between fixed and variable used to be really nice, and everybody was going into a variable mortgage, and now it's so close that 1.5 increases on prime and they're at the fixed, so you might as well just go secure, and
Yeah, that's right. Not take the
I've always
risk.
had variable until last year.
Yeah, so have we.
Yeah,
Mhm.
it's too bad, it was a good run.
It was a great run.
It did what it was supposed to do.
Yeah.
Could have carried on a little longer.
But you know what, sometimes they increase and then a short time later they'll decrease back again, so.
Mhm.
you
We
never
never know.
I think that's why they moved it up, just in case,
know.
right? Good article today on inflation, on the BBC, they were talking about it, so some economists are talking deflation, so who knows what's gonna happen. Globally,
Yeah, it's like they
anyway.
wanted to slow things down for a bit, cause there was too much lending going on out there, right?
Mhm.
So slow people down, and then once everybody looks like they're okay, then they'll reduce rates and let them borrow
I
again.
don't know,
Mhm.
yeah.
Calm down. Yeah.
I wouldn't want that job.
No, I know.
Any other questions for Karen?
Good for you.
Amanda will speak for us all, no questions. No, I think like you covered a wide spectrum, which is not what
Well,
I thought
don't go in too
RBC
deep
would go,
depth either,
Yeah.
because,
but it allows us
So
to
much.
realize.
Yeah.
really is so much, and we're constantly, you know, learning new stuff every day, because they're always changing something.
Yeah,
So to go into
Mhm.
depth, you know, going too deep, and then tomorrow it's totally different again, so. Just basically for you to know what products and services the banks have, because most of them will
Which is
have
nice.
similar ones.
Yeah.
The new rules, well, again, it's all computed on the calculator, all the client really needs to know is, we gotta go about 2% higher than the rate you're gonna get to approve you. So you can't borrow as much this year as last year.
and I like, well, and the big answer was is that you were holding it, like, you know, if they were pre-approved,
If
at
they've
least they
already been-
still have that. Unless they
Pre-approved
did,
at the credit department.
right, and as long as they didn't buy a car and,
Yes.
you know, overextend
Yeah.
on everything,
So we
everything
have,
is
when
going
a
to be
client comes
fine.
in, we have a pre-approval and a firm approval. So a pre-approval means I've loaded up the application, I've collected the documents, and the numbers work for this price of a house, basically. It doesn't go to credit. So if their income is really strange and we send it to credit for the pre-approval to be approved, that's what we're honoring. But if we've just done a pre-approval, regular one, we're holding a
Mhm.
rate for 120 days, but those rules will go into effect on that deal.
Right.
Okay? A firm approval, once the client finds a property and we have an offer, that's a firm approval, and then we do not look at their credit again. So once they've been told, unless they're changing the amount, so if they're doing a new build, say, and they wanna do 30,000 in additions 6 months into it, then yeah, we're gonna redo their credit, because we have to add to the app.
Right, but other than that,
Other
they're
than
pretty well safe.
Yeah.
Wonderful.
So
Thank
if you've
you.
got anybody that you've been showing houses to like 2 months ago,
Yeah,
and they've got a rate held, just remind them that you know, it's probably changed what they can afford, but they still have the interest rate held for 120 days, it's just the approval might be a little harder.
That's right, which
Yeah,
changes our amounts,
Mm-hmm.
when we are looking for
Yeah.
them.
So we're still honoring their old interest rate for 120 days, but we still have to qualify them higher than they.
And the higher, okay.
Good to know.
Yeah, it is. It is. I know, 'cause- well, I'm just dealing with
Is it
one that I
hard?
know it's at that, and I'm like,
Got a
I don't know, now I need to
Oh, yeah,
ask her a few questions.
Want another one?
No,
What's enough?
yes, I can't get approved for anything else. Once you have rentals, like, that's what I'm told, I can't get approved for anything more, because I have a bunch of rental properties. So, yeah. We don't need to get into
You
it
got
right
like
now.
20?
No, that's the thing, but I'm told, like, don't even start looking for a house to move into.
Well, I mean, as long as most of your rent is covering your
Yeah,
payments, it's not affecting the TDS too much.
yeah.
You got your hands full, maybe is what
Yeah,
you mean.
we have to talk later.
You're too busy.
Yeah,
Yeah.
shadow.
Alrighty.
Well, thank you very much for sharing your knowledge, we really appreciate you coming out.
My pleasure, it's fun.
Yeah,
The ride's not very fun.
I was just gonna say, unfortunately, we brought you out on
The
a
only
wonderful
snowy
snowy
day.
day.
The only one this year.
Exactly.